Welcome to Financials 101, a four-part video series designed to give you a foundational understanding of the three main financial reports every small business owner should understand and use, including how to do a break-even calculation. This video covers the break-even calculation. I'll explain how this calculation is done and why it's useful. It builds on the information presented in the videos covering the profit and loss statement and the cash flow statement. If you haven't watched those two videos yet, I encourage you to do so before watching this video so that you understand the terminology. Let's get started. The break-even point. What is a break-even point and why is it useful? Simply put, the break-even point is the amount your business has to sell to cover expenses exactly, nothing more. Anything above that point is pure profit, but up until that point, you're just covering expenses. This break-even point can be expressed as dollars of sales or in the number of units you have to sell. Units can be your average product, we'll call it a widget perhaps, or it could be the number of hours you have to sell. If you have a pure service business, you're just selling your time, so how many hours do you have to bill in order to cover expenses? We can calculate a profit break-even. It basically answers how much do you have to sell for the business to be profitable. But we can also do a cash break-even, and that is more about how much you have to sell for you to be happy. And this can be used, this break-even point can be used to evaluate when to hire or expand your business. Let's look at a visual first, and I'll start with a pure service business. It's perhaps a more simple example of this. You can see I've got a vertical line indicating increasing dollars on the left, and then a horizontal line showing the number of hours sold increasing out to the right. Every business has what are called fixed costs. These are costs that you have to pay whether you sell anything or not. It's the cost of keeping your business open. You also have a revenue line. The more hours you bill, the more hours you sell, the higher your revenue will be. Where those two lines cross is the break-even point. Now you can see in this example that in the left side of the graph there, the cost line is higher than the revenue line. Therefore, you're operating at a loss until you hit that break-even point. From that point on, you're operating as a profit. Now this profit won't increase infinitely because you're limited by the number of hours you can sell in a day, the number of billable hours you can actually do in a week. If you're like most pure service businesses, 80% of your time is finding the next engagement, and only 20% of your time, maybe 30% of your time is actually spent doing the work. Now let's look at a business with inventory. Again, it's the same general graph here. Every business has a fixed cost that they have to pay. This is your overhead. But if you have an inventory, in addition to those fixed costs, you also have variable costs on top of that. These variable costs, as you know, increase with the number of widgets you sell or the number of wholesale items you buy, mark up and sell at retail. It's now, if we look at the revenue, of course that increases with the more widgets you sell or the more items you sell. Now you'll notice that that break-even point has moved up a bit. That break-even point, you can either look at it as the number of products you have to sell, number of units or widgets, not really the number of products per se, but the number of units you have to sell. But it also gives you a break-even point in dollars. And again, like in the previous example, you'll notice that variable cost line on the left side of the graph there is higher than our revenue line. So up until that break-even point, we're operating at a loss. But after that break-even point, it's pure profit. So how do you calculate this? Well, let's first start calculating it in the number of units we have to sell, the number of widgets, if you will, we have to sell. We start by calculating the gross profit, and that's simply the average price of your widget or the average price of an hour of your time minus the cost of goods sold. In this case, we'll keep it with inventory, and it actually has the cost to make that sale, to make that product or to sell that product. We then calculate the total fixed cost, otherwise known as your overhead, and from other videos you notice that that's the summation of your general expenses plus marketing expenses plus payroll expenses. Break even then is those total fixed costs divided by that gross profit. Let's try an example. Here we're going to calculate a profit break even in units. And units in this case is a canvas bag. We've decided to sell a canvas bag. We've looked around and found some plastic bags, grocery bags out there, very cheap looking things. They're selling for $8 a bag, but we've also seen some other biodegradable canvas bags, very similar to ours, except that this other competitor has external pockets as well. But we don't have external pockets. They sell their bag for $12, so we're going to price ours a little bit less at $10 a bag. We've also made some calls and found a distributor who's willing to sell it 100 bags. If we buy 100 bags at a time, he's willing to sell us a bag for $5.50 each. If we do that little math there, we find that our gross profit is $4.50. In other words, for every bag we sell, $4.50 can go to cover our monthly expenses. Our fixed expenses, we found, is the summation of our general expenses, marketing expenses, plus payroll expenses, and it comes to $1,350 a month. The question then is, what's our profit break even? If we take that total expenses, that $1,350, and divide it by $4.50 a bag, we find that we need to sell 300 bags a month to cover those costs. The moment we sell the 301st bag, we're making a profit. How much profit? $4.50, but it goes up from there. Now let's look at the same example, but this time we're going to calculate break-even point in dollars. The calculation is very, very similar. We start with the gross profit, and that's the price per bag minus the cost of goods sold. We calculate the percent gross profit. You remember from those other videos, I asked you to start thinking in percents. Here's a good example of that. This is known as your gross margin, and it's the gross profit divided by the price, the sale price. We then calculate the total fixed costs as before. That's our overhead. Break even now is the total fixed cost divided by that percent gross profit or gross margin. So for our example, it's the same numbers here. Gross profit is still $4.50, but now we divide that by the sale price and we find 45%. This means that 45% of every bag we sell can go to cover our expenses. If we run through our break-even calculation by using this formula, as we said, we find that we need to sell $3,000 worth of bags per month. And of course, we can just simply say at $10 a bag, that's 300 bags, but this calculates it in dollars. After we crack $3,000 a month, after that, it's all profit. So let's take it a step further. Remember, this break-even only covers the costs, the expenses of running the business, the fixed costs. But let's say we want to make some profit. So if our break-even is 300 bags a month to cover those fixed expenses, we ask, is it even possible to sell this much in our service area? If we decide, no, actually 300 bags a month is a bit much, then we need to rethink our assumptions. Perhaps there's a way we can lower our cost of goods sold. Maybe we can find a distributor who sells the same quality bag, but for less than $5.50. Or even go to the same distributor and ask, what's the next volume discount? If we buy 200 bags at once, maybe we can get a lower price, maybe $5 a bag, or maybe even $4.50 a bag. We can also look at how we can increase the perceived value of our bag and therefore increase the sale price. People are willing to pay a higher price if they see a higher value. We may change our marketing strategy. Perhaps we're talking to the wrong audience, to the wrong people who don't understand how green our bag is, how biodegradable canvas is, how much better it is for the planet. Maybe we need to change our pricing strategy. Come up with a sale of some sort. Buy one bag, get the second one at half price, something like this. Or perhaps we need to look at our fixed expenses. Is there a way to operate our business more efficiently, to lower our overhead costs? New assumptions create new numbers. When you have those new numbers, run those through this calculation and see if you can get a yes there. Is it even possible to sell this much? If you say yes, in fact it is, we can sell 300 bags a month, in fact probably a lot more, then we can ask ourselves, how much profit do we want to make? And let's just say we want to earn $900 more per month. The calculation is pretty much the same as before. 900 divided by 450 per bag is 200 bags. You add that to the 300 bags we need to sell to cover costs, and we come up to 500 bags. Now, when you calculate your break even for your business, you always ask two questions. One, is it possible to even sell that much in your service area? If you can't, then rethink your assumptions. If you say yes, you move to the second question. Are you willing and able to do that? By willing, I mean, do you have the motivation and drive to do what it takes to sell, in this case, 500 bags a month? And are you able to do it? Able means, do you have the time, the resources, the capability, the production capacity to meet that 500 bags a month? Is it even possible to sell that much every month? And are you willing and able to do that? Now let's go back to our friend Sarah and her pie bakery. For Sarah, she wanted to calculate her break-even point as well. Her assumptions are she's found that she can sell, on average, a pie for about $24. She also found that it costs her about $7.68 to make those pies, on average, and therefore her gross profit is $16.32 for every pie she sells. She divides that by the selling price and gets 68%. What that means is 68% of every pie she sells, on average, can go to cover her costs. Now her costs, of course, she needs to cover the operating expenses of her business, but in addition to that, she wants to take out $16,000 a year for her own uses, and she wants to put some money toward retirement, maybe a vacation. There's some other outgo there. If we add that total up, we find that she wants to cover $40,500 worth a year in these expenses. Question then is, okay, if that's what it takes to make her happy, how many pies does she need to sell in a year to make her happy? Let's look at that. Well, the total cash out, that's the nut that she's trying to cover, is for $40,500, and 68% of every pie she sells can go to cover that. She needs to sell almost $60,000 worth of pies in a year. How many pies is that? It's just shy of 2,500. How many pies per week? Now keep in mind, she wants to only operate 50 weeks out of the year. She wants a 2-week vacation. So it's only 50 weeks of production. She needs to sell 50 pies a week. But also, she's closed 2 days a week. She's only baking 5 days a week. So 50 pies, 5 working days, 10 pies a day. When she hits 10 pies a day, she knows it's covering all her dreams. It's covering everything she's asked the business to do. She's happy. If she realizes that there's no way I can sell 10 pies a day like this, then she rethinks her assumptions, just like before. Is there a way to change these numbers in a way and maybe build up to 10 pies a day? Well, let's say she's hitting 10 pies a day routinely, no problem, but it's burning her out. She's getting real tired of working so hard and making pies, and she realizes she needs to hire a part-time person. She asks her bookkeeper, how much would a part-time person cost her, cost the business? I don't remember what wage she might have said in this one, but there are payroll taxes involved with paying an employee. And in this case, her bookkeeper says it'll cost you as the business $15,273 a year to pay for this person. Great. 68% of every pie I sell can go to cover that new additional cost. And we work through exactly the same calculations. We find that if the bakery is selling 5 days a week, 4 more pies a day. So add that to the additional 10 that she needs to sell to make her happy. She realizes that when she hits 14 pies a day on average, every day on average that she's open, she can afford to hire a person and know that she can keep that person. None of us like to hire someone only to find out 2 months later we can no longer afford that person and we have to let them go. by doing a break-even calculation based on that hiring, on that decision to hire, you will know in your business when your business can comfortably afford to hire that person or to expand, to do what you want. Now that's for an inventory business. I don't want to leave those of you with pure service businesses in a lurch here too. So let's look at Tom. Tom has a consulting practice and he is selling his expertise, his time, his labor at $65 an hour. He doesn't have any cost of goods sold because it's a pure service business. But working through the same calculation, you ask, how many hours does Tom have to work to break even? Well, if his total expenses are $34,000 a year and he's earning $65 an hour in billable hours, he needs to work 523 hours or about 3.3 months in order to cover his expenses. That $34,000 may include everything he wants. It may just be the overhead of his business. But he now knows how to calculate how many hours do I have to work to be happy. When you calculate your break-even number for your business, it may be useful to actually put it on a graph. That's the red line. You calculate what your break-even should be for the year, and then the green line is your actual sales as they happen throughout the year. And you can track how you're doing compared to break-even. This video was made possible by funding from the Pacific County Economic Development Council. My name is Jim Williams. I'm a trainer and business coach with Enterprise for Equity. Our mission is to help people with limited income start and grow their own successful businesses. For more information about our classes, please contact us.